Welcome back to the Amberdata Podcast, where we dive into the people, products, and protocols shaping digital assets and technology. I'm Izzy Henderson, Director of Product Marketing at Amberdata. I'm so excited to be joined by Yashreeka Huq, partner at Perkins Coie. Her journey is nothing short of inspiring, navigating corporate ladders, ultimately building a founder-focused practice at one of the most influential tech firms in the country. So we're going to talk about her path to partnership, the ethos of Perkins, how she advises founders, and then we're going to look ahead on crypto and emerging technologies that are reshaping startup law. Yashreeka, thank you so much for joining us.
So happy to be here. Thank you so much, Izzy.
Awesome. Let's dive in. So before we get to the big legal and founder focused topics, I really want to start with you and your story. What made you want to go into law?
Yeah, I think it's not everyone sort of comes out of the womb saying they want to be a lawyer, but I think I was pretty close. It was that sort of age old, like, oh, you love to argue, so you must be a lawyer. And I got told that so much as a kid. I will say I wanted to be both a ballerina and a lawyer. So one of those worked out, one of them didn't. But yeah, I think I was always very talkative, very persuasive. And so I was told a lot, like, I think,
Hmm.
you must want to be a lawyer. And so I think that got embedded in me. The big pivot, though, is that I would have thought I'd always be a litigator. I would have thought that I would be like a public defender or even like a full-blown criminal defense lawyer or something like that, because I did speech and debate growing up.
Okay.
Again, like to this day, still very argumentative and confrontational. So I would have thought I'd wanted to be a litigator, but I think the experience that changed me, which was so crazy, is that when I graduated from undergrad, I moved to Cairo, Egypt, where I had studied abroad, and I started a performing arts company. So the ballerina Jeff
Wow, it was really intersecting here.
continued.
Yeah.
Yeah, so I started this hip hop performing arts company. Pretty
Wow.
amazing. And I really enjoyed like the wheeling and dealing of like trying to,
Mhm.
strike like sponsorship agreements and like work with MTV Arabia or work with the venue or whatever. And I kind of enjoyed the business side of things. I was like, I enjoy this more as like the founder than I do as the
Yeah.
dancer or choreographer, even though I did love that stuff. So then I was like, oh, well, maybe maybe I want to be a corporate lawyer. So I did this business program at Stanford for like a month and was like, yeah, this is really great, but I still want to be a lawyer. And I was like, I really going to law school has been a dream of mine. I'm going to do that. But when I went to law school, I thought, oh, maybe I should look into a transactional path, which really threw off a lot of people. Even my like crim law professor was like, are you sure? Like,
You're not going to be in court arguing.
yeah, like what? Like you're it's basically, defending your position in class constantly. And I was like, yeah, I think actually I'll be a better corporate lawyer because of that. I actually think some
Wow.
of the best corporate lawyers would have made really good litigators. So much of what we do is actually defending our clients and advocating for our clients, and we're doing it constantly. So I think like the fact that I would have been a good litigator makes me a really good corporate lawyer, but that is the real plot twist in my life is that then I became a transactional lawyer.
That's
Um,
incredible. And what a way to
yeah.
combine, your interests and then suddenly
Oh,
you've ended up
yeah.
in that.
Yeah, absolutely. Yeah, it feels really good.
So then what drew you to tech specifically?
Yeah, so that's a great question. Because I started out as like a pure play M&A lawyer at a white
Right.
shoe Wall Street law firm. So I was
Wow.
doing private equity M&A mostly.
Yeah.
And I think candidly representing private equity bros, and they were a lot of bros back then. There are a few less bros these days, but they were bros back then.
Totally.
Um, and I was like, this is not going to sustain me for the rest of my career. Like, I need to find something that makes me feel like more passionate. And so then I learned that you could represent startups and make the same amount of money. So this is one thing to know about me. I will talk about money, and I think that we should
I
all
love
talk
that.
about money, and it's not a dirty word. And so it was really meaningful to me that I could make the same amount of money as a startup lawyer, as an M&A lawyer. The reason for that is actually brain drain. It is that you will
Mhm.
not get the best startup lawyers to be startup lawyers. They'll just stay M&A lawyers, or they'll go be capital markets lawyers
Mhm.
or whatever if they don't make the same amount of money. So it's like it's a supply demand thing. So
Totally.
it brought me to the startup world, which, oh, by the way, that's why startups, that's why we're so expensive.
Yeah, it's actually good to know that it's not
Yeah,
a
like
price
it's
tag tacked on.
yeah,
If
it's
you
like
want the
your
best,
lawyers
you gotta
would
pay the best.
not be very good if you didn't
Totally.
pay the same billable rate as your M&A transaction. So, but anyway, so I knew that I wanted to be so I learned I could make the same amount of money. My sister was a startup founder at the time. She's worked at countless startups in the Bay Area. I would have never thought I could represent her. And that was like a real light bulb moment for me and was so exciting. So then I applied to a bunch of firms that do startup. And startup, of course, is very tech heavy. There's tech, there's life sciences, there's some consumer, there's consumer packaged goods, CPG, not a dirty word. I think everyone thinks consumers, it's not a dirty word. Like those are amazing companies. I buy a lot of things. But yeah, so venture encompasses tech, life sciences, and consumer, and so I was really drawn to that. And then I would say on a macro level, right? I graduated in 2007 from undergrad. I
Wow.
witnessed a real
Right
evolution
before. Yeah.
where, yeah, where the top companies now are tech companies. And so oh, how funny. My best mentor, and I'll name him Bob Zakowski, at my first firm. He was incredible. We bonded over being Georgetown alum. He said you should go where the money goes. Because I asked him, I was like, you've done such cool deals. He actually securitized the Marvel superheroes, like
Wow.
really cool. Yeah. And I was like, how did you get involved in this? He was like, Yashreeka, it was not by design. I just went where the deals were, where the
All of
money,
the money.
follow the money. And so that has always, kind of been in my mind. And I'm like, how could you not work in tech? Like, I'm sort of like, how could you not be a tech lawyer? And I think many lawyers are tech lawyers now by default, even at the white shoe Wall Street law firms. But I'm like at the beginning, where the real innovation happens. So I'm
You're
like,
at the birth
hey,
of the
I'm at the birth.
exactly. And I think
So
it's so, like from the other side of tech, like the growth has been incredible in recent years. And I think we feel the same way of like, why wouldn't you want to be in tech and why wouldn't
yeah,
you want to be doing this and involved in this
yeah.
side of the story? Yeah.
Yeah, I remember when I was leaving my first firm, a lot of people were like, "Oh, you're going to like represent the next Facebook." And I was like, "No." I was like, "Maybe," but I was like, "No, I think I want to represent like the next company that like cures cancer with like a chip in the brain. You know what I mean? Like something
Exactly.
crazy, wacky, like that's what I'm excited about. And I don't know that I'm the person that comes up with the ideas, but I'm the person who executes on the ideas for sure.
I love
So
that. It's a really good thing to know about yourself, and both are equally important, right? You
that's
really,
right. That's right.
yeah,
So like you've got your people who come up with the ideas and you've got your people who like drive it forward, and I'm the latter. So it's so rewarding to do that with startup founders. So that's how I found myself in tech. I made a big pivot in terms of like your practice of law to
yeah.
go from M&A to startup. You really have to retool and like learn an entirely new practice. And I did that like 4 or 5 years into my practice. So big pivot, really hard. But I then, I became a startup lawyer, but then my M&A background actually has elevated me as a startup lawyer, like in an unbelievable way, like where I can really speak the language. I can even do some of the smaller deals myself. My clients all care so much about M&A, either buy side to grow, by being exploratory or by exiting, obviously, in an M&A deal. So it's all come full circle. But if you talked to me like 6 years ago, I was like, why am I doing this to myself? But I'm
Then
really glad
what's
I
the
did.
growth from 6 years ago to now? You've had this, like you said, elevation, right? And it's, I
Yeah,
think, a very inspiring rise to the top as partner. And you were a
yeah,
queer Muslim woman. That
yeah.
is not something we see, every day still, which, that's a whole nother topic. But how did you get there? And what was it like positioning yourself and repositioning yourself from M&A to startup law and then just at different firms.
Right. So you're right. I check a lot of boxes and it has not been easy. And I don't know, I would say that it's not those boxes I check that actually have made it so difficult to get from where I started to now. It's not being queer, it's not being brown, it's not being a Muslim. It's actually just being like a whole person. So
Wow.
when we prepped for this, Izzy, I told you I was going to be very honest.
Please be honest.
And
This
so
is
I'm
what
going to
this
be
is
very
for.
honest. I
Please.
think I'm a whole person and I bring my whole personhood to
Yes.
basically every conversation, every situation that I come to. Not all lawyers are like that.
Right.
And especially the lawyers that are involved in the assessment of associates and whether or not they get promoted. And
I,
so I'm sure you've talked about this on this podcast, or people have heard about it on other podcasts, the concept of pattern matching.
yes.
And I think that I don't match any pattern. So it's not even like
Love that though.
if there were other queer brown Muslim women in the partnership, maybe I would have had any. No, I don't even think that would necessarily help. I truly don't match any pattern. So I'm constantly proving myself. Like I'm constantly
Yeah.
trying to like prove to the powers that be that like, yes, I am not like you, but I will still be successful. And this kind of circles back to advocating and being argumentative and confrontational and all
Yeah.
of that. It has served me really well to fight for myself, to get to where I am. But it has been challenging, because I'm not your average lawyer. I'm not just someone who seems like a scribe who just puts their head down and works.
Right.
What's interesting in we call it big law, capital
Right.
B, capital L, in these like top law firms. We What's very interesting is that what makes you a very good associate doesn't necessarily make you a good partner. And so I
Mm,
was like constantly having to be like, I'm going to be an excellent partner. And they would be like, yeah, but you need to be a good associate now. And then I would be like, look, I'm both. I'm like a very diligent, hardworking technical lawyer, and I can speak to people and make them
right.
feel very comfortable. Like I'm a trusted advisor. And they were sort of like, I don't believe you. I don't believe that you can do
Yeah.
both. And I constantly got accused of doing too much of the latter. Too much
Mm,
business development is what we call it, which is like too much of the like trying to bring in business and meet new clients and that kind of stuff.
yeah.
And then I would be like, but I work like 16 hours a day. Like, how are you not seeing
Right.
how hard I work? And it always felt like, I was having to prove that no, I am a strong technical lawyer, but I just have these other attributes that are actually going to serve me really well as a partner. And I had to like advocate for myself about that quite a bit.
But then I think, your personality being someone that was always told that they're a great arguer and debater, that really seems like that totally helped
Totally
in
helped.
your path. But also, I think when I think about tech founders and like people that work in tech, I feel like they fall into your box. It's like people
Yes.
who, like you maybe
Yeah.
don't fit the mold where, a lot of people came from like traditional finance and are now
Mhm.
in digital assets and crypto because like they didn't fit that mold and like often people didn't know what to do with them and they wanted, you know, to do all these big things and had all
Oh
these
yeah.
personalities. And so I think
I
that's a great fit.
I very often relate to my founders because
Yeah.
I joke like I'm a startup. So I'm actually a startup. I was just promoted to partner January 1. I was just promoted. I got to figure out my go-to-market strategy. I
Yeah,
have to figure out how to
totally.
build top of funnel. Like I have to do all of these things. I'm a small business myself. And so I'm like, I'm so well aligned with my early stage startups. Like their wins are my wins are their wins. And we are just like pushing, in the same
Yeah.
direction. We're at such similar points. And I think it's a startup founder hack to find a young, eager lawyer who is just as like hungry as you are. I think that's really important. Yes, I get that the like middle-aged, gray-haired partner has a ton of experience and that's amazing. But I think the scrappy, young, A super eager partner can make up for a lot. Not to mention, like, nothing we do is really rocket science. So let's not get too like excited about needing years and years and years of experience. And so I think it is a founder hack to find a lawyer who feels like they're a startup too.
I love that. And I think that's fantastic advice, especially for, tech founders who often feel the same thing. They may not have the experience, but they have the scrappiness and the ability to work hard and just get things over the finish line. And that's
Yeah.
super important. So then let's
Yeah.
dive further into Perkins. So I want to bring up something topical. Your firm was targeted with an executive order. What was that moment like, and how did Perkins respond in terms of ethos and stance on protecting clients? You are the protector of clients.
That's right. That's right. Yeah, I got chills just even hearing you like ask that question. It was a wow, what a way to begin my first year as a partner. To receive the executive order in March. It was March 6th. I'll remember that date for the rest of
Wow.
my life. Look, we are the defenders of the rule of law, right? Like that is all of us here at Perkins have thought so hard about that and taken that so seriously. And so that the rule of law was targeted at by this executive order, and we defended ourselves by saying this order was unconstitutional, and we won. We won in the district court,
Amazing.
and we're really proud of that. I'm so proud to be a Perkins lawyer, and I would say it is no coincidence that Perkins Coie saw someone like me who did not pattern match, right? And saw the business case. And I don't think these things are floating out in outer space separately. I think a firm that feels committed to its principles and doesn't back down and fights for itself
Yeah.
is going to see that an attorney who fights for herself and fights for her clients is the kind of attorney they want to promote. So it was such a full circle moment to, while very scary, to
Right.
feel like, wow, I landed at a place that shares this ethos that I have that's so deeply embedded in me. If there's one thing my whole life, it has been that I have like fought for the underdog, for myself, for others. Like that is, I remember my mother sitting me down when I was very young and being like, you're going to live a really tough life because you're always kind of fighting for the little guy. And I was like, yeah, I'm signed up for that, and I still am.
I love that.
So to be at a firm that is so aligned with me, like I'm unbelievably proud to be a Perkins partner, and it's been a journey. I will say the firm is doing really well, and we weathered
Great.
the storm. And so really excited, and we've been head down working through this whole time, representing amazing companies from inception all the way through exit. And we've continued to do that. And that was a big part of the whole experience, was to be like, let's go back to first principles, which is that we are the trusted advisor to all of our clients. We must continue to do that. The executive order infringed on that. We must fight against that. And so we brought it down to something very simple and basic, and it's served us really well.
That's awesome. And then you mentioned, fighting for the underdog. What does that look like in practice? Like, what are you providing for founders at an early startup stage?
Yeah, absolutely. So it's something I'm so passionate about. I like to say that I represent my pre-seed companies as vigorously as my pre-IPO companies.
I love that.
Yeah, it is. It's something I'm so passionate about, because I think those early stage startups, especially first time founders, your lawyer actually is sort of your guide to the startup world.
Mhm.
Because in the ecosystem, actually, startup lawyers see more deals than like anyone else. So
Wow.
we see obviously more deals than the founders, right? The founders are only seeing their own deals, more deals than the VCs. The VCs max do like 10 deals a year. I do like 30, 40, 50
Whoa.
deals a year. Yeah,
That's
yeah,
not, and for
absolutely.
someone whose partner is in private equity, M&A, I'm like, that's insane.
It is
Like, are you
insane.
ever home? Like, that's
Yeah,
crazy.
it's shorter cadence. Tell your partner a shorter cadence, so like four to
Got
six
it.
weeks.
Yeah.
Yeah. But it's still it is like it is a roller coaster. It's pretty
Definitely.
crazy. And so we have so much market knowledge. And then that's just me, right? You multiply that by like the 30, 40 partners here at Perkins, and we're seeing
Wow.
thousands of deals a year. Yeah.
That's
So
insane.
I have my hand on the pulse of what's market.
Mm,
And what's amazing is Perkins is a national firm. I consider myself bi-coastal. Like I have clients on the West Coast and the East Coast. I think an amazing thing is happening where Silicon Valley and New York City are really becoming totally aligned. I'm based here in New York. And so like we kind of keep our hand on the pulse of what's market in Silicon Valley and New York City so that if anyone comes to you and is sort of like, oh, this is totally normal. If your partner wanted to do a deal and sort of said, oh, there's gonna be 3x senior liquidation preference of participating preferred, I would throw up all over that and say absolutely not. That is not market. You heard that as a private equity investor who is optimizing for the wrong thing.
wow.
So on the pulse and so it's really important for your startup lawyer to be someone who you can trust to do that. um, the things I think about are like two levers in the early days. There's dilution and there's control. So
Yes.
dilution is your economics, right? It's like I own, I'm a solo founder. I own, 90% of the company. And every time you do a financing, you're going to be diluted down. And you're going to be diluted down 10 to 30%, most likely, each round. So that means after 2, 3, 4 rounds, like you're sub 50%, your equity ownership is shrinking. And that makes founders very, very nervous. I totally get it. Okay. But then the other lever is control. And so
Mm,
it's whether or not you get to control your business. So maybe you own 90% of the company, or maybe it's diluted down to say 70% of the company, but you don't control your board. They can remove you at any time and make decisions for your
right.
company.
Right.
So there's dilution and control, and I like to counsel my clients to like over-index on control and think about dilution, but remember that we can address dilution later down the line with something we call top-up grants. So you might take some extra dilution by going with the investor with the lower valuation, but that investor is not taking a board seat or you've learned from other founders, always back channel with other founders they've invested in to know that they're a great partner. So
Right.
that can be worth way more than like, an additional 1 or 2 million on the valuation. So I counsel my clients a lot on that sort of thing. I like to joke that I like when people say like, oh, that's not market. I'm like, well, that's fine. I'll move the market.
I love that.
Like
What a line.
yeah, like, and so one of those things is board seats. Like, I think that giving away a board seat at the seed financing is not necessary. I think the added sort of like administrative headache of a board doesn't make total sense. I'm not
Yeah,
saying we shouldn't have quarterly meetings or keeping our investors up to date to get
sure.
that muscle memory, generating quarterly financials, doing all of that. We got to get the muscle memory of having a board, but actually having a board seat, because if you give away a board seat at the seed, it could be 2-1, two common, one preferred. But then at the Series A, if you get another preferred director on the board, it's two common, two preferred, and one independent. You've lost board control at the Series A.
Wow. So
If you're
fast.
not paying attention,
Yeah.
that's what will happen. You're like, oh yeah, 2-2-1, that makes total sense.
Just get
Oh
swept
my
along.
God. Yeah, whoa, like that independent, it's also blood in, blood out with independent seats. So like it might be that the founders can put in place the independent seat, but then if the preferred stockholders get an approval right over it, you can't remove that person from the independent seat without their consent. So if your
Wow.
independent starts to align with the preferred, you lost board control, you could be
Oh,
removed as CEO and like lose your company. That's like worst case scenario, right? Like I sadly am the Grim Reaper. Like I have to bring up these worst case scenarios that we hope never happens. You hope that you never look at the documents because everyone is just so happy with what's happening and everyone's aligned and the board never disagrees on anything. That's what like you are hoping for. The
right.
docs provide rules of the road when things go wrong. And so that's where I come in and have to sort of like give that the experience, the possibilities of what could go wrong. And so at 221, like, no, at the Series A, that's wild. And so your startup lawyer hopefully is guiding you that, like, maybe don't give a board seat at the seed, then you give one at the
Right.
A. If you had to give one at the seed, maybe they demand it. At the A, let's go to a 3-2. Let's make sure we're going to a
Oh,
3-2. Let's give the CEO 2 votes, right? Let's give the like one of the
sure.
partners 2 votes. Like all of that you need to be thinking about and seeing down the line. So
Wow.
one thing
Yeah.
about your startup lawyer is you need to have a startup lawyer that represents companies the full life cycle. So like I have seed companies, I have A, B, C, D, E companies. And so that way, when I'm advising my pre-seed companies who are doing a seed financing, I can say, this is what could happen at your Series E. And so we need to be thinking about that ahead of time. And
Totally.
so yeah, this is the kind of thing I counsel my clients on all day, every day, and love it.
Yeah.
But yeah, control is really important. Dilution, as I said, if you're getting diluted by 10 to 30% every round, then that means like by your Series C, you're down at like 15, 20%. And
Wow.
then you're just going to continue at every financing, it'll go down and we'll do a top up grant to get you back to where you were. Top up grants are option grants. They're not as great. They have a strike price, right? You have to pay a lot of
Oh,
money to exercise them. They're not
oh,
as good as the restricted stock you got at the beginning, but it still gets you to, that same percentage. And let's
right.
be real, like 15% of $100 million is life-changing money
Still
for a lot
millions
of
of
people.
dollars.
Yeah.
Yeah.
So like let's not get too fussed about
Hmm.
equity ownership, and let's care more about control of your company and ensuring that you can do what everyone is betting that you can do. Let's make sure you can do that over the long run. So
Wow.
dilution and control, I always want my clients to be thinking about both of those things.
That was incredibly helpful. I think probably for everyone listening who not only works at a startup, right, but is
Yeah,
thinking about founding a startup and maybe
that's
has an
right.
idea
Yeah,
ruminating. It's so important to know that before you jump into those even like seed level conversations. I would have never
that's
even
right.
imagined that it starts there, but it really does.
It does. It really does from the early days. I mean, one other just little nugget I'll share is that your Series Seed docs are actually the precedent for the rest of the life cycle of your company.
Wow.
So if you give away something in the Series Seed, it can be really hard to ever get it back. So a lot of people think, oh, I don't want to spend a lot of money on the expensive startup firm. And so they'll use a smaller shop or maybe, like someone who's not a startup lawyer, right?
Mm.
They're like, sister's friend or whatever.
Yeah.
And then they negotiate these docs and then they move over to a bigger firm after the seed, and we're sort of like, you already gave away the farm. So now we have to kind of figure out we'll figure out how to
Right.
optimize and make it work. But it is really important to find good counsel even in those early days before you do your seed financing.
Definitely. So then let's touch on the big beautiful bill. I know it definitely had implications for founders. What does it mean?
Yeah, there's a lot to lament about the current political climate. So we gotta take the wins where we can get them.
Exactly.
And one of the wins is the qualified small business stock. So I did want to say this is your public service announcement to all blockchain founders to care a little bit about your equity. Like the tokenomics, so important. I love that for you. I love what's happening in recent, in the last like 6, 8 months.
Here, here.
Um, but your equity matters too, because in a lot of big transactions, right? Acquisitions or financings or whatever, there are opportunities for liquidity with respect to your equity. So please think about it. And one of those things to think about is qualified small business stock. So under this portion of the Internal Revenue Code, you can take the greater of 10x your basis or $15 million tax-free and put it in the bank. Before the big beautiful bill, it was only 10 million. So
Wow.
now it's 15 million and you put it in the bank tax-free. You pay zero taxes on it. So it's like in my example, actually, remember 15% of $100 million transaction, you get $15
Yeah.
million. That full 15 million right into the bank, you would pay $0 and 0 cents of taxes.
Wow.
It's the qualified small business stock exemption, and it's designed to encourage entrepreneurship. And so in this last bill, they want to encourage it even more. So it's gone from 10 to 15, which is amazing. I hope everyone caught that I said the greater of 10x your basis or $15 million. That's a little trick. Your basis is what you paid basically for your shares.
Yeah.
Typically, we all pay like nothing for our shares when we're founders. But sometimes you form as an LLC and then you convert that LLC into a corporation at your first priced round. When you convert your LLC into a corporation at your first priced round, it's going to have a higher basis because the company is worth, say, $20 million. That's the post-money valuation of that financing. That means if you own 50% of the company, your basis in those shares could be about $10 million. So guess what 10 million times 10 is? It's $100 million tax free. And I've seen it happen. I've seen it happen.
Wow.
It's usually with my serial founders
Mm,
where they have strategically formed as an LLC. They converted into a corporation at the first financing where their basis was higher. They got way more than the 10 million at the time.
so
They
cool.
got $100 million tax free because it's the greater of 10x your basis or 15 million now. So pretty wild. You need to hold the shares for 5 years, but actually now they have a prorated piece. So if you hold it for 3 years, I think you get 50%, 4 years, 75%, something like that. So that's amazing because a lot of times you sell at like 4 years and you wouldn't get
Mm,
the benefit at all. Now
right.
you can sell after 4 years and get some amount of QSBS benefit, which is amazing. You do need to make sure that you don't blow the QSBS exemption by doing some like wonky stuff, like non-ordinary course repurchases of stock. There's basically the Internal Revenue Code is like, don't try to game the system. Like you get your 15 million, but like don't do anything, no funny business.
Right.
And so a lawyer will make sure that you don't do anything to blow QSBS. And by the way, your venture investors, they get QSBS. I mean, everyone is aligned to
Wow.
preserve this. Oh yeah, and their basis, they do the 10x basis thing. So yeah, it's really wild. Like the QSBS benefit is unbelievable. And so that's why it's really important you hold your shares. Because if you don't actually own the shares, then you won't start that QSBS holding period. You also won't start the long-term capital gains holding period, which is only
Mm,
1 year. Holding your shares gives you a lot of tax advantages. And so alert to all the startup founders out there, make sure if you hold an option that you consider whether you want to exercise it to start that long-term capital gains and QSBS holding period. Like
wow.
you may want to do that. And so a lot of startup lawyers encourage their founders to issue options in the early days, and
Mm,
we can talk about whether or not, why they're doing that. And I have a lot of thoughts. I encourage restricted stock, but a lot of times, like, that first engineering hire has an option grant that they got in early days, and the strike price was a fraction of a penny. And then they
yeah.
haven't exercised, and then there's a liquidity event, right? There's a sale of the company, and they're like, wait, don't I get 15 million tax free? No, because you don't actually hold your shares. You just have an
Wow.
option. And it's really bad. You would have to pay ordinary income tax rates
Mm,
on that. You'd have to pay a much higher tax rate, not even long-term capital gains. So make sure that you are looking at your equity to see if you need to actually exercise your shares. Think about QSBS, think about long-term capital gains, like think about these holding periods because they can be really, really meaningful upon exit. So make sure you have your shares. Like the equity matters too. Tokens are great, but remember your equity.
No, the equity absolutely matters, and these
Yeah,
insights are so helpful, obviously, for a founder's outcome. But I'm finding this helpful, and I'm not a founder,
great.
just but I'm anyone with shares or options, like list
Yeah.
it, like
I
this is
know,
helpful to you.
please.
Totally.
Yeah. And you'll hear a lot of rank and file like employees kind of think their equity is just like funny money, and they're not paying attention. And
Yeah.
it can really be meaningful. And even if, let's say, you don't recoup like your sort of decrease, you didn't take a big salary, you worked for a startup. Yeah, maybe you don't make millions, but like imagine if your $50,000 that you got could be tax free, right? Like that's still meaningful. So
Yeah.
So like pay attention is just my advice. Yeah.
Awesome. So then to close out in our final section, so Perkins is also, on the cutting edge of some of the most complex deals in crypto and emerging tech. I'd love to just quickly zoom out and look at that. Um, your firm is advised on some wild crypto treasury strategies, including companies siphoning funds into SPACs. What's a SPAC? What's unique about this?
Yeah. Amazing. So SPAC is a special purpose acquisition vehicle. Oh my gosh. Special purpose, hold on. Special purpose acquisition company. There we go.
There
Okay.
you go.
Um, so yeah, it is wild times right now. And so just to give like a little reminder of what we're talking about, a lot of crypto companies are sitting on a treasury of tokens. Most often, maybe not most often, but the ones that feel like it's the most lucrative, it's Bitcoin. But
Great.
we're seeing a lot of like Solana, ETH, like maybe their own token. They're sitting
Mm,
on a treasury of those tokens and it's kind of not doing anything, right? Other than the sort of volatility in the crypto markets. There's this idea that we could put them into an entity that would reverse merger into a SPAC. And the SPAC is publicly traded. So you would be able to kind of put your tokens into an entity that's publicly traded so that you're not only getting the benefit of the tokens increasing in value, you're also getting the benefit of publicly trading that company and sort of the company increasing in value. And then people can buy shares in that company that holds the treasury, right? So it's a very interesting strategy, very in fashion at the moment.
totally.
Sort of bouncing it around our crypto group and, to say like, has the bubble burst? And I think it has not. I think it may be nearing the top,
Sure.
but it's something that I think every crypto company that has a treasury should really be thinking about. Perkins has been on the cutting edge of this. Oh, I should say, I do not view myself as a blockchain lawyer. I think I'm blockchain adjacent. Okay. I think that I
Love
represent
that.
companies that are blockchain companies. We have incredible experts at our firm who know the blockchain kind of regulatory aspects like way better than I do. I do the sort of boring corporate law stuff. But a lot of my clients, yeah, are thinking about this strategy, and we did most notably the MicroStrategy Bitcoin for corporations.
Wow.
Yeah, that was like obviously we were pioneers in this kind of transaction. And then we did not just Bitcoin, also Solana. We did the Janover. It's called DeFi Development Corp now, formerly Janover. So we did these awesome transactions, and I think what I would want to communicate most about that is like, man, the blockchain environment changes like that, and there are new ideas all the time. And I just am so impressed with how our blockchain group at Perkins stays right there in lockstep with any new, change or idea or any of that. Like our lawyers are just as creative as the blockchain founders and they're so passionate and excited about it. And so I'm just so impressed by that. And in some ways we impact the market as
Totally.
well by coming up with, the sort of structure for how these things should be done. And we can kind of set the market, which is also so exciting. So I really am in awe of my colleagues, and what they've done in this space. And per them, the bubble has not burst. It's still something you should be thinking about, and something everyone is excited about. We might be nearing the top though, so it doesn't mean there's not a lot of money to be made on the other side of the hill, but something if you want to move on this, you should move quickly.
I love that. The fact that law is innovation and what you guys are doing. And, it's such a new, we constantly say, this is such a new ecosystem. This is the Wild West. This is, exactly, there's no road book here, or sorry,
Yeah, yeah.
but it's true for law as well. And,
Oh yeah.
it's awesome to see the innovation is, it's sort of like there's a conduit, right? It's from tech and then also into law and into finance and all these other places. So that's been cool. So from your blockchain adjacent perspective, are you seeing more collaboration or more friction between the regulators and the innovators in today's environment?
Yeah, great question. So, as I said, I'm obviously very transparent about the political climate and
Yes.
how tough it is right now. And we were obviously the target of one of the kind of worst aspects of it.
Mhm.
But a great silver lining, and I'm a huge silver linings person, is that the current regulatory bodies are less hostile to
Yes.
cryptocurrency companies, and that is the direction we should be moving in. I'm very supportive of that, and we should do it in a thoughtful way. And so, the SEC's Project Crypto is so exciting that we're moving towards actually working together, like cooperative rulemaking and
We've needed that. We've
yeah,
felt that,
yeah.
finance has felt that, everyone's felt that.
That's right. That's right. I mean, it wasn't going anywhere. So to just sort of bury your head in the sand and say, no, I don't want this,
Right.
like that, that didn't work. And, I think has resulted in some unnatural kind of consequences. So I think this
Yeah.
is this is a positive movement. It's still like there's still a ways to go. It's not a free for all. I would not describe it that way. There's a lot of uncharted territory, some things that we want to see or some like harmonizing the federal and state classifications, right?
Yeah.
We always have to battle that. And anything we do as lawyers, we also have to think about federal securities laws and then state securities laws. And state securities laws are always kind of behind federal. And then there's a lot of cross-border work that we still need to be kind of working on. That's a challenge. Cross-border is just a challenge generally. I mean, the US has become, much more vigilant with respect to national security and the like corporate world of CFIUS and that sort of thing. So there's a lot of work to be done, and it's still evolving, but this was definitely a step in the right. We're moving into an environment where I think we can all collaborate and get to a better outcome.
And we love to hear that, that positive silver lining outlook. And, we
Yeah,
really have been seeing it in terms of our clients, in terms of, um,
yeah,
in TradFi terms, right? In the allocation to projects, and even just like feeling that regulators are starting to move a little
yeah,
bit in the US, and like in Europe, they've been moving, and now the US is playing a lot of catch up and doing really
yeah,
well with it. So
yeah.
um, it's great to see. Okay,
Very
one last question for you. If you
okay.
give advice to yourself from 10 years ago, what's one?
Yeah, this is a great question. I actually was on a panel last night and I asked a similar question. It's a good one. I think with respect to blockchain, I have a funny memory where, and I'm sure a lot of people have this response, which is 10 years ago, I should have bought Bitcoin.
Yep.
I was in law school. This guy who, he was a friend and he was like, I'm buying Bitcoin for pennies and, I could like buy a pizza and send it to someone, that sort of
Bitcoin
joke at
people,
that
yeah.
time. Yeah. And I remember just being like, what? Like, and anything this guy said, I would sort of take with a grain of salt.
Yeah.
But I was very wrong. I should have just bought. And I think actually that feeling that we all have of missing out on that makes us all like so susceptible to FOMO now.
Right.
So it is fundamentally changed all of us. So I would say buying Bitcoin is something I would tell my younger self to do. Um,
Me
but
too.
no, yeah, I think it's, lean into to these like big changes. So don't be afraid of it. I mean, I think I was better than most lawyers and being willing to kind of roll my sleeves up and learn this stuff. I always encourage people like watch the rise of Bitcoin on Netflix, like just watch a documentary on blockchain and try not to be scared of it. So I think I did take that advice myself 10 years ago, but I probably could have done more. And then advice, like generally that I would give myself, would be that whatever I was saying back then about why I left a law firm and was applying to a different one, or why it maybe didn't work out at whatever law firm, because I always like to say that I like pinballed my way to the top. Like I
Yeah.
moved from one law firm because I just don't know that because of the pattern matching issue, that they'd ever see someone like me as anything more than what I came in as. So if I came in as an associate, they could never really see me as a partner. And if I came in, if I had to come in right at the top in order to finally be promoted, I always felt that way. And so, but when I made these moves, I sort of said things like it didn't work out at my last firm because I just wasn't let into the old boys club. Like the like Chads and Brads were getting all of the like best
Yep.
work, right? And I wasn't. I said that back then and I doubted myself and sort of was like, am I just telling this story? But really, I just wasn't good enough. Man, I wish I could go back and be like, Yashreeka, that is exactly what was happening. You were an excellent lawyer. They
Yeah.
couldn't see beyond, everyone makes mistakes, but they couldn't see you beyond anything more than that. And
Sure.
so you really like those stories we kind of when we're pitching ourselves, we're constantly pitching ourselves in interviews and whatever
Mhm.
like those stories you can believe them like they're not just stories you're telling like you can actually believe them and feel good about what you're saying that can be authentic. I
Yeah.
think I doubted myself then and now I look back and I'm like no, that's exactly what happened and I finally got to where I am because I fought for myself and fought to be here. So yeah, I have lots of advice I'd give my younger self, but gosh, man, it's just like believe in yourself. You're doing great.
And that's the best note to end on. It's been such an
Yeah.
amazing conversation, and that is incredible advice. Believe in yourself um and buy Bitcoin, which
Yeah. Right.
totally.
Exactly.
Yashreeka, thank you so much for this conversation. This was liquid gold for everyone at a tech startup with entrepreneurship in their blood who is in tech at all, right? Your journey, your incredible perspective, just your macro view on law and the economy and where, tech is heading, so valuable for I think anyone, especially also lawyers. Like, hello,
Yes.
lawyers, this is
Yeah.
great advice for you too. I know our
Absolutely.
audience is just going to take away so much from this. Thank you so much for joining me, and I hope you come back on soon.
Thanks so much, Izzy. You're the best. Thanks.